Hello and welcome to BQ Prime. I'm Hiral Dadia. Gold has long been regarded by investors as a valuable commodity during times of uncertainty. However, historically, it has produced long-term gains in both good as well as difficult economic times. And due to numerous sources of demand, gold has particularly been resilient and has the potential to produce decent returns under a variety of market circumstances. Taking the current global economic scenario into perspective, what's the road ahead? What's the demand looking like? Joining us on the show to discuss the same is Mr. Somasundaram PR, Regional CEO, India World Gold Council, as well as Kunal Shah, Head Commodities Research at Nirmal. Welcome to the show, gentlemen. Soma, let my first question come to you. Overall, if you see in terms of the kind of numbers that we've seen, clearly the demand has been increasing. We'll go to the households later, but if you see central banks, they've added almost 1,136 tons of gold, which is worth around almost $70 billion to their stockpiles in 2022. And this is the highest since 1950. What is this actually indicating?
Well, one of the things about the central bank demand is, as you rightly said, it's the highest ever we have seen. And it's to do with the fact that, first of all, reserves have increased, and second, quite a few countries are also diversifying the reserves away from pure dollar reserves. Okay, so that on top of it, the rate increases, the uncertainty put gold right at the center of attention. So a combination of these factors have actually made the central banks now move to gold in a big way. Of course, quite a big chunk has been bought by China and banks like that, but the buying has been widespread. So the central bank action tells you that gold is going to play a very, very significant role in the monetary system going forward.
Right. In fact, Kunal, coming to you as well, if you see gold, it has been a good inflation hedge since 1971. If you see, it's outperformed both the US as well as the global consumer price gauges, that's the CPI, as well as it's shielded investors from excessive inflation as well. So overall, the need for a counter-cyclical investment during uncertain economic times is what is raising the price of gold as well. What is that trend indicating to you basis these points?
Well, first of all, I'd like to add that I keep saying it and I reiterate again, gold is a strategic investment right now, not just for the central banks, for everyone. Looking at the current geopolitical and the overall economic environment across the globe. So whatever is happening in the US is clearly indicating towards one thing, that gold prices are going to head much higher going forward. Looking at the way their balance sheets have expanded, the way the economic uncertainty persists going forward, nothing is sure. So every other day we witness, that some of the other things. One day we see the prospects of the rate hike are bright and gold goes down. Another day the prospects of rate hike are bleak and gold moves up. So this is basically indicating one thing for sure, that the uncertainty in the financial market, in the broader global economy, is continue to persist for far longer time than what we are seeing right now. So it's not just a question of 1 month or 3 months. This uncertainty regarding the monetary policy, regarding the geopolitical situation, regarding the devaluation of US dollar, all this thing is going to persist for far longer time. And hence the role of gold, like Mr. Somasundaram said, that the central bank buying is more of a strategic rather than just a diversification, because they don't know what is going to happen, how they are going to manage things going forward. And that's why they are buying gold. So in a modern world where the inceptions of Bitcoin and other instruments are coming, central banks are moving back. They are going towards gold. So I think it's a strategic investment, and whatever is happening in broader global economy, gold is going to be a direct beneficiary of whatever is going to happen in future.
Right. So, Kunal, thanks for adding that perspective as well from an economy perspective. Mr. Somasundar, if I have to come to you in terms of the household part of it, right? India being one of the largest consumers of gold, how are you seeing that trend? Because clearly the belief still says okay, let's buy physical gold, right? That transition from physical gold to say gold mutual funds or ETFs has not happened. Yes, coins still remains, but still it's physical. How are you seeing that transition and that faith in terms of investments in ETFs and mutual funds from here on?
See, India is largely a jewelry buying economy. Does not mean people buy jewelry purely for ornamentation. It has got a very, very significant purpose. Weddings, 60% of demand comes from weddings. But the purpose behind it is also economic. People buy, that is why we always go for 22 karat jewelry. We just want the pure gold so that it can be encashed when you want it. And we have a very robust system, even at the lower end of the hierarchy, economic hierarchy, that they can monetize this gold anytime. They just walk into a bank, into an NBFC, and you walk away with a loan, which is one of the fastest growing segments in the banking, by the way, as we speak. So the question here is, people buy jewelry in India, but not purely with the objective of ornamentation. It is an investment. Now, coming back, is ETFs and others, how significant are they in India? Because we have a robust system, as I said, of being able to buy jewelry and yet treat it as a in a collateral for a quick loan. I think people have not moved on to this. Plus, there are various other factors, dematting, KYC. Whereas when you go to buy a jewelry, all these things are not there. So there is also a certain habit which is part of this. And there is the fact that we still believe that a 22 karat jewelry at home is as good as having an ETF. Now, how do you grow this market is something which we need to see. At the moment, our ETFs, they have grown, but they are very, very small as compared to the overall demand. We have, I think, about 40 or 42 tons. Sovereign gold bond came in. Now, overall, all the issues together is about 100 tons. All right, all these years, 7, 8 years, we have been issuing it. You can really see in these 7, 8 years how much of gold has India bought. Maybe at even 800 tons. For these 8 years, you bought something like 6,400 tons. Of that, you have 100 tons, which is there. So this explicit investment part for lack of support, perhaps, is a very small fraction.
Right. And Mr. Somasundaram, are we seeing substitution of dollar assets with gold? And if that's happening, is it structural or transient?
Well, one thing we have to understand, gold prices have been going up and down, and India continues to buy 800 to 900 tons. I mean, barring the lockdown period, if you really see, India continues to buy 800, 900 tons. We were buying 800 tons when it was 30,000. We are buying 800 tons when it is 50,000. So it is not about gold trying to displace anything.
Right.
It is very important to note. It's not like Indians are going for gold at the expense of others. Equity markets have grown. Still, gold is 800 tons. That's important. But the economy has grown.
Absolutely. In fact, if you see from a price trend perspective as well, Kunal, let me come to you on this one. Yields lower, a weaker dollar, and a safe haven buying. Now, these three actually points have lifted the gold price in the month of March itself. I think a 9% uptick that we've already seen. And you had the recent banking industry crisis as well. From here on, where do you see it moving? Because yields across the board have risen after the UK inflation surprised on the upside. And that has actually paved the way for terminal rates of 5% in the region. And Fed has also come out and said in its monthly beige book that the rate of inflation in the US appears to be slowing. So putting all of these factors into consideration, how are you seeing the price trend?
So the thing which is happening with all financial market participants or the entire ecosystem is we have to read too much into single data points. So UK inflation moved up, okay, rates are going to move up, gold should go down. No matter what happens, gold is going to move up. That is my view. Because we are in a structural fix as far as the problems for the central banks and how they are going to manage the entire financial markets are when you talk from that point of view. So there are two base case scenario. One is they keep raising interest rate in order to bring down the inflation to their target of 2%. So if they do that, we are going to see more and more sort of crisis, more economic slowdown, and that will eventually lead to a higher gold prices. So a SVB bank failure caused $100 spike in gold in a matter of one day. So now imagine if this kind of problem persists into housing market, which is on the verge of fallout, or if this kind of problem persists in other parts in the economy, US economy, what is going to happen? It's going to cause slowdown. So this is the slowdown driven by the central bank themselves. So gold is going to respond to it. And then comes the second part. They pause. They do pivot. They don't increase the interest rate. In that case, the dollar index is going to weaken and gold prices are going to shoot up. So I don't see any reason for meaningful crash in gold prices. I see a small bouts of correction here and there will keep happening, but the structural trend for gold is going to be much higher, because the last time when gold prices hit $2,000, at that time the US Fed central bank's balance sheet stood at $4.5 trillion. This time it is staggering $8.5 trillion. So gold prices, if you see by that logic, should have been much higher. So people are seeing that gold is trading at all-time high, and people are cautious. The Indian jewelry demand is slack. It's not picking up. The discount in the domestic market is pretty high. All these factors have nothing to do with the directional view of gold going forward. The directional view is going to be up. We are going much higher and for much longer period. So my view is that whatever has happened is pointing towards a scenario where even at these levels, the investment in gold for next 2 to 3 years will conservatively fetch you, 10% CAGR, 12% CAGR return, no matter what happens.
Right. In fact, Mr. Somasundaram, coming to you as well from a pricing perspective, if you have to link it to what the Fed is doing as well, because there is a lot of relevance that comes in from that perspective. When are you expecting the Fed to pivot? Because yet there is an expectation of another hike that could come in the month of May. But if the Fed pauses, if there is a pivot that comes in there, what happens?
Well, we have always seen this. It's very difficult to predict what the central bank is going to do, and we never do that. But
absolutely,
what I would say is, and Kunal put it rightly, whichever way you go, gold is at this moment where we stand, it's going to be a big beneficiary. Because either way, it is going to, if they pause, then you're going to say, they can't do much more. Therefore, gold is going to react positively. If they keep increasing, then there is going to be a slowdown. It says, oh my God, there is a lot of uncertainty. Let's go for gold. So it appears very structural. It is not, of course, we see the rate increase in, or pause as the tools, but they are basically, there is something underlying, which is not going to change overnight. All right. So our view is that, we have always said we don't predict the price, but we have always maintained, whether it was 30,000, 40,000, a certain amount of gold in your portfolio always protects you. Now, that case has gotten a little stronger now across the board. And again, that was a point Kunal made right at the beginning. It is very strong case for gold in your portfolio. Now, how much should you hold? It all depends on how much risk you have taken, etc. But in a scenario, we say 5 to 15% is very, very important to have in gold, because then your portfolio becomes that much stronger.
Right. I mean, that's an important point to look at. Kunal, from your perspective, when you read the charts, when you're seeing the trends from a price trend perspective, what's the kind of upside that you are looking at? Not a short term, but from a medium to long term perspective.
Yeah, so first I don't look at charts, and my understanding is based on the pure fundamentals. So it is very difficult to predict the levels, but like I said, conservatively, gold this year is going to test $21.50, $21.75, that kind of level. So another $150 to $180 rally is what I'm expecting. Next year, $2,300, $2,350. And all of my forecast is very conservative. So I'm not sticking out my neck and saying that gold is going to be $3,000. That will be quite, because I don't have any substantial, I don't know how to substantial that. What the message which I want to convey to the viewers is that gold prices are going to head much higher. Forget about the levels. We have a very wrong thing. At what levels, why? No, I don't think so. Levels are important. Whether it is going to be 65,000, 75,000, no, that's not the right. The point is that it is a strategic investment, and conservatively, if the other assets are going to deliver, so if I'm a US citizen and I'm going to get 5% out of 5% interest rate out of my savings account, gold is going to give me 10%, 12% for sure, no matter what happens. So on the conservative side, I'm expecting 2150 this year, 2300 next year, but I will not be surprised if it gives an exponential spike in the price going forward. So logically speaking, with whatever is happening from the demand side, mainly from India, China, from the jewelry demand point of view, gold should have been down, but it's no longer about the jewelry demand. It's about the central bank. The gods of the financial market are central banks, and they themselves want to diversify. They themselves want to hedge. Then the predicting price is not the right attitude. The right attitude is to understand where gold is heading, and gold is heading much, much, much higher than even what I'm forecasting right now.
Right. Thank you, Kunal, for that. Mr. Somasundar, any closing comments on it?
Well, as Kunal has put it, as we said, we hear these kind of sentiments from everyone. Gold is poised for a very strong run, clearly. But as I said, regardless of this, gold is playing its role very significantly. There are a lot of uncertainty. No one actually is able to say which way will dollar move, which way will rates move, what will happen if rates keep increasing, what happens to the Indian rupee price, So many things are out there, and it is in these times of uncertainty that gold plays a role. And right now, the attention is now turned towards gold. And so we believe, therefore, there is going to be a very, very strong case for more gold products and bringing gold actually into the banking system, so that it integrates the whole thing. Currently in India, it still is very parallel. Either you go to the bank and the financial markets, or you go to the gold market. I think we need to integrate that. That's the way I would leave it.
Absolutely. I think well-made points. I think the key takeaways out of this are going to be, Kunal and Shoma, that treat gold as a strategic investment, a wealth creator, and taking your risk appetite into consideration of 5 to 15% as a part of your portfolio should be a given. So that's the key thing that we need to watch out for as well. Thank you so much for joining us on the show and giving us those views. Stay safe and speak to you all soon again.
Thank you very much.
Thank you.